welcome to our next NAP. NAP stands Nonprofit Auditor Points, and I'm your nonprofit auditor, Irina Oishkova. I designed these NAPs to help nonprofit community, its financial and accounting team and board members to understand better some accounting and auditing issues. And these videos are not authoritative. I'm a practicing auditor, but I do not represent any authorized body. So therefore, this is just my experience, my knowledge that I'm sharing with nonprofit community. Okay, let's talk today about how board should review financial statements and what financial statements should be periodically reviewed by the board and by the management. Let's talk about it. So every time when we work with nonprofits, board members and their management always asking about the system of internal control. What can we do better? What can we improve? What our system of internal control should be? I would say the most important control procedure that every nonprofit can implement, it's periodic review of financial statements. And by periodic, I don't mean once a year. I literally mean monthly, maybe quarterly. But if your nonprofit does it less than that, that's probably not a very good system of internal control. Because reviewing financial statements, you as a board member and the management, you will be looking at historical information. And it's already historical. And if you're gonna do it less than quarterly, then we're talking about 3 months ago. And it's very, very late. It's too late. Therefore, for every nonprofit organization, I would advise to implement monthly or quarterly review financial statements by management and by the board. But you're gonna ask what statements we should look and in what areas we should pay attention. Because I'm not a finance person, I don't understand what I will be looking at. So hopefully this short video will help you to get started on the review. Again, even small review, it's better than no review. And board and management need to take a look at 3 main financial statements: balance sheet or statement of financial position, income statement or statement of activity, and the third is statement of functional expenses. And I will show you as a board, and hopefully you as a board member or as management will be very helpful to understand what area you need to look and what questions you need to ask your accounting department. Okay, first statement, balance sheet. Balance sheet statement, very critical and important, and it can show give you very valuable piece of information about nonprofit. Balance sheet is structured, as you can see here, that I'm showing you, structured total assets and liability and equity, or liability and net assets. And in the total assets indicate everything that organization has as of this specific point of time. So if you as a board member reviewing financial as of December 31st, for example, 2022, this is indication of all assets that organization had as of that date. So typically, balance sheet has some bank accounts, this is check bank accounts, and there are some receivables, okay? What I would advise to do as a board member, please provide me bank reconciliation for all the bank accounts, just to verify that the bank has been reconciled. You as a board member does not need to understand bank reconciliation in details, but at least ask your accounting department to produce your bank reconciliations as of December 31, 2022. The second item would be accounts receivable. Ask your accounting department give you account receivable aging schedule. and see if the aging report agrees to the amount that you see here on the balance sheet, and ask your accounting department, do we expect and when do we expect to receive this receivable? And that would be amazing oversight of financial statements. Now, liability and net assets, which is the second portion of the balance sheet, you can ask why we have so much liability, who do we owe money to, and whether we have enough cash to pay it. And just a great indication of a good position of the nonprofit would be if you take your total cash and compare it with your total liability. In this case, you can see total liability 386 and total cash is 14 million. So yes, nonprofit have enough cash to pay this liability. So I would not worry. But if my nonprofit will show me the total cash is 386, but liability 14 million, so we reverse the positions, that would be concern because that's not enough cash to pay liability. So as simple as that, only 3 questions would be: give me bank reconciliations, tell me who owes us money in receivable and when we expect to receive the payment, and why we have so much liability, and is it enough cash that we can pay liability. Even if as a board member you ask those questions, you've done enough due diligence to review balance sheet. Again, balance sheet is as of specific point of time. If you review them quarterly, the next quarter would be March 31st, 2023, then June 30, and so September and December. So this was the first statement, which is statement of financial position or balance sheet. The next statement you would look is the statement of functional expenses. Ask your accountant to prepare your statement of functional expenses. This is very important statement. What it does, it takes all expenses for the period and allocates them in 3 buckets: program, general management, and fundraising. And that is a good indication how well organization performs on the program area. Typically, we prefer to see that program expenses are at least 70 to 75%. Why? Because donors and funders prefer to see that majority of their dollars go directly to the program, not to management in general and not to fundraising. Here you can see there is slightly a problem. You can see that I calculate the percentage. Total program expenses 26%, for general administrative 37%, and for fundraising 37%. Total 100% of expenses. As a board member, I would ask why our program percentage is so small. Do we allocating correctly our expenses between program, general management, and fundraising? What methodology we use to allocate some major accounts? For example, I see Federation regrant, we put almost $1 million in fundraising. I know as an auditor that's a mistake because regranting is not fundraising activity, that's actually program activity. So if I, as a reviewer, identified incorrect allocation, I will fix it right away. Look, my percentage already better. My program activity 43%. Look, in another partnership regrants. Again, regrants, for some reason, it was a mistake. Whoever prepared the statement put it in the wrong bucket. Now, by fixing this, it's already 57% in program, which is even more better. And then I go salary and wages. Okay, I need to understand methodology, how we allocated salary and wages. But let's look at another large amounts. Grants fund released from restrictions. That's probably not account that belongs in here. And miscellaneous expenses. I would, as a board member, I would ask why we have miscellaneous expenses, 367,000. It's way too much for miscellaneous. If my miscellaneous were incorrectly allocated, maybe my percentage will go even more than 57%. So the questions for the board to ask, first of all, please prepare statement of functional expenses for the period, allocate between program, general management, and fundraising. Calculate that this percent should be about 75%. If it's not about 75%, you need to understand why. There should be a good explanation. Maybe the organization did some large restructuring that was for general administrative. Maybe it was a major fundraising event, then it was more expenses in fundraising, but it needs to be understood why the percentage for program is so low. Also take a look at each line and make sure that allocation appears reasonable. You can also look at allocation that was done last year to see if this is consistent with last year allocation. That's a second statement. And the next statement, last statement, is profit and loss statement or income statement. This statement indicates all revenue and all expenses that the organization incur for the period. If, for example, we look for the year, it will be for the year. You can see, and I would also ask accounting department to prepare comparable with the last year. So this allow me to compare with last year. By the way, all accounting systems allow bookkeepers with a push of buttons to prepare comparable balance sheet, income statement, so you can compare last year with current year. So you can see total revenue and you can see total expenses. Expenses we already looked in the statement of functional expenses when we allocated, so you don't really have to pay too much attention. But what would you look? You look, okay, our total revenue is 23 million this year. Last year it was only 1.7. Wow, we're doing really great. Why are we doing so great? Ask the question. Then, do we doing too good? Maybe it's put pressure on the organization, administrative personnel or an operating personnel because we grew substantially very quickly. And look at expenses. Last year it was 1.7 million. This year it's 17 million of expenses, but the net income profit, which is change in the nonprofits, it's called change in the net assets. It's a positive 17 million. So we know that the organization is doing great. It's actually generating positive net income, even though net income is not a proper word, but we will use it just to have a better understanding. So expenses managed well because expenses less than total revenue. We're good. And you can see where the revenue is coming from. And you can ask, what is the interest income? What is the other income? I don't know what the other income means. It's a substantial number, 64,000. Please, accounting department, tell me. And looking at overall expenses, you can ask why equipment is a negative number. What does it mean? Why maybe some expenses increase from last year substantially or decrease? But major area here is to look at the net income, which is difference between total revenue and total expenses. If we take total revenue minus total expenses, we see minus total expenses, my sincere apology, wrong math. This is our net profit for the year. We've done really well, nothing to be worried about. Again, review only took 5-10 minutes. You can literally ask 10 questions. You guys ready? I will summarize. On the balance sheet, please provide bank statement with the bank reconciliation as of December 31st, 2022 for all bank accounts, just to see if the reconciliation was performed. Question number 1. Number 2, show me accounts receivable aging report and confirm that we expect to collect all receivables soon, and when do you think we will be collecting them? Provide me dates for all the receivables. That's question number 2. Question number 3, accounts payable. Why are accounts payable such big number? And do we have enough cash to pay this accounts payable? That's question number 4. That's on the balance sheet. Now, statement of functional expenses. Provide statement of functional expenses. Number 6, explain why our percentage allocation is that, what methodology we use. Number 7, if my program percentage is below 75, please explain why. Number 8, look at allocation by account and see if it's reasonable. Number 9, profit and loss. See if we have total revenue minus total expenses positive number. Great, meaning we generate more revenue than expenses. And last one, see an unusual revenue accounts and ask what they are, why we have other revenue, miscellaneous expenses. Some other miscellaneous accounts are very unusual and should not be present on financials because they're not telling us much. We don't know what other and what miscellaneous. Here's your 10 question for the board review of 3 financial statements: balance sheet, income statement, and statement of functional expenses. And let's do it at least quarterly, and even better, monthly. Thank you so much. Hopefully you will find this video helpful, and let's oversight your financial statements. Thank you, and I'm looking forward to see you for the next nap.